Bismillah ar-Rahman ar-Rahim. Our esteemed shareholders, analysts, dear colleagues, Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome for our investors presentation for June 2026. After the disclaimers, we'd like to present our economical and sectorial outlook for Oman, in which as you know, the Omani economy continue to have a stable growth, and the expected growth in 2026 is around 3.5%, despite all the issues happening in the region. The government continue their efforts to reduce their debt to GDP, which show a drop by 47% from 61% or 62% in 2021 to around 32% or 32.7% in 2026. A further drop of 3% expected between 2025 to 2026, which show the government and the economy commitment to control the debt. The government revenues show stable growth in revenue despite the volatility in the oil prices, and that's clear from the growth, the stable growth in the oil, non-oil or non-hydrocarbon revenue, which reached 9.7 billion Omani dollar, as compared to 7.7 billion dollar in 2021. Thus, $2 billion growth is not easy in this environment right now, putting in mind the current volatility which we face in the region and in the world from 2021 until 2026. MSX show very stable growth, one of the best performing market in the world, not only in the region, despite all the volatility happening in the other stock exchange, which show the investors' trust in the Omani economy and in the Omani company, and also the attractive valuation for MSX companies, including the banking sectors and the other service and industrial company. Also, the new IPOs, which was presented or was offered in the market since 2023 until 2026 in different sectors, add more liquidity, trust, and also insight to the market. We need to add here also there is a growing global interest in the Oman as economy and in MSX, and that's a result of the good economical growth, the diversification of the economy, and the stable credit rating of the countries by all the three rating agencies. Sohar International, established in 2007, one of the youngest bank in Oman and maybe in the region, with a total asset currently of around $27 billion. We had merged with HSBC operation in Oman in August 2023, and we have more than 1,750 staff and more than 650,000 customers. We operate and serve all of those customers through 76 branches between conventional and Islamic, in addition to our branch in Saudi Arabia and our expected rep office in Hong Kong. We are the fastest growing bank in Oman and maybe in the region, and the second largest bank in Oman. We are the third highest market cap in MSX after OQEB and Bank Muscat. Through our operation in Oman and Saudi, we have four main streams. One, the wholesale banking, which represents 67%. Of course, the Saudi operation of 8%, also part of the wholesale banking if we consolidate the financial. And we have the retail operation or retail banking, which represents 14% of the total asset, and Islamic banking, which is also 11%, which is mainly a retail operation and wholesale banking. Our market share of the total asset is 21%, but our marginal growth of the market share, or the market share of the marginal growth, is the highest in the market, and our market cap is $3.6 billion as on 3rd of August. We have diversified shareholders in which more than 50% of the shares are diversified across more than 6,000 shareholders. Sorry. Our performance, we continue to grow our return on equity. So our return on equity grew from 10.9% in June last year, to 11.1%, pushed by the growth in asset, high quality asset. Maybe we earn a lower return on that. However, all of those assets with lower risk-weighted capital allocation, and that's helped us to enhance our return on equity. Cost-to-income ratios increased from 44% to 46%, and thus reflect our vision to invest more in people and technology to continue our growth. Our loan-to-deposit ratio increased from 84% to 87% or 88%, and that's for a better utilization of our liquidity and optimize the utilization of our deposit and liquidity. For the last 5 years or 6 years, we show very stable growth in all lines, either total asset or loans or deposits, between 21% to 28%. So it is not only 1 year growth. However, that's growth which is above 20%, is a sustainable growth for the last 6 years. We have the financial overview, in which I will ask my colleague Greg to present it.
Great, thank you, Abdelwad. Thank you very much. Just leading off on the comments from Abdelwad around the compounded annual growth rates, you can see these growth rates are translated into the bank's growth in operating income, operating profit, and also the continued growth, accelerated growth in our net loans, matched by growth also in total deposits, which I'll discuss shortly. Likewise, the key ratios, I'll dig into those in some substance. If we look at the profit and loss account, referring to the net interest income, the growth in the balance sheet has driven the volume variance, creating that positive 14.6 million. There is a slightly negative price variance within that, as the bank's NIM is stubbornly around 2% compared to where similar levels back in December, and down from where we were a year before. We do see a drop in our cost of funds, but also we see a lower yields. There's two sides to that. One is we're also using the balance sheet to grow quality credits, but on the positive side, the operating income has continued to accelerate. The ancillary income we're generating from our relationships, we're seeing positive growth in the foreign exchange, as well as some significant fees through our business advisory services and growth in trade. In fact, we see growth across all our operating income streams. Abdelwad alluded to the investment we have in technology, people. This is driving the operating expense base, but also important to note that within that operating expense base, 5 million is related to people, 10 million is related to other operating expenses, but a significant part of the operating expense growth is related to volume. So as we see the increase in our volumes, we're seeing increases in transaction costs, withholding tax, VAT, and this is one of the drivers. We also see significant investment this year coming in from the back of last year in marketing. You'll see our profile is very prominent in the market, and our marketing expenses cut across multiple areas of the Omani sectors, supporting our businesses. If we look at the impairment charges, we'll see that has increased, but the percentage is in line with last period. Commenting there, I mentioned the net interest margin at 2%, but also I referenced the other operating income growth which remains high, particularly as a percentage of our total income. The balance sheet story is dominated by the growth in our loans, and from a funding perspective, we've continued to fund that through our customer deposits, as well as interbank borrowing, as well as the support from the perpetual AT1 of 200 million back in September. Our capital story, post the rights issue, very successful rights issue, we've demonstrated here the pro forma post-rights issue capital ratios using June 26 as the baseline, showing a 14.4 CET1 ratio, 17.8 Tier 1 and 18.5 total capital ratio, which places us very high in terms of the banking sector here in Oman. And more importantly, it positions the bank to continue with its growth story and its strategic investments, including our branch in KSA. On the funding and liquidity side, noting the increase in our customer deposits to support the majority of the funding of our growth and loan book. We maintain a strong liquidity coverage ratio. We have seen some pressure on the net stable funding ratio, which we continue to monitor. But noting the volatility of interest rates in the market and globally, we're looking at opportunities to how we will continue to manage that ratio, noting, as I say, the increasing volatility in rates and determining how best to fund that. And finally, just a note on credit quality. The cost of risk for the bank is at a similar level to where we were at 31 December at 47 basis points. We have seen an increase in our non-performing loans. That has resulted in a reduction in our coverage ratio. Coverage ratio is well above 100. That is by design. We continue to balance the use of some management overlays with our cost of risk. Our restructured loans as a percentage of the total loan book is reduced, but in absolute terms it has increased. And this is one of the reasons why we continue to maintain a strong coverage ratio for the bank. We'll now open the discussions up for Q&A.
Hi, good morning, Abdullah and the CFO and the team. This is Sundar here. Pleasure meeting you. I have a few questions. I'll start with a couple of questions and then come back to you. One thing on what is your views on the latest regulation which came from the both in terms of two regulation. One is on the CPO for the Islamic Windows segregation. And what's your long-term views in terms of Sohar Islamic is one of the growing sectors? What are your views in terms of the segregation of the Islamic banking as a separate entity? And also the investment banking activity, which also has to be segregated as a separate. This is an FSA one, and what are your thoughts and what kind of steps Sohar is looking at as a strategy in terms of going forward? This is my first question. And my second question is on the Saudi growth. I think congratulations, I think phenomenal growth the bank has achieved. This is one of the kind of fastest growth we have seen, and we already made a good in terms of bottom line contribution is also pretty strong. We just want to understand from the strategy perspective of Saudi, because this is one of the markets which has gone through different cycles. Because previously all the banks from Oman and including certain banks have faced issues. Do you see a different strategy? Which kind of sectors you are looking at in terms of KSA or a bit more? Because we just want to understand from the perspective of how the risk management goes through because the bank is following a bit more different aggressive kind of strategy in terms of growth. That's my second question. I'll stop here and I'll have more questions, but I'll keep the others to participate and then come back to you.
Thank you, Sundar. I believe regarding the regulation, I believe that both regulations and regulators looking for better governance and better stability and long term for both regulation, either about investment banking or Islamic, will ensure a better governance and sustainability for both line of business. Of course, we will continue investing in both of them until the segregation. What will happen in 3 years, that we'll disclose about it at that time. About Saudi, myself, I was 11 years in Saudi. Greg, you were 8 years? Or
3 years.
3 years, sorry. Yes, 3 years. So we know the Saudi market very well. As an economy, I believe that Saudi was one of the most stable economy. All the banks in Saudi were performing very well at average return on equity, I think about 15 to 18%.
Yes.
A lot of project, a lot of economical project and growth is there in Saudi. We believe that if you apply the ABCD in banking and you apply the right risk management supervision, which we do closely from Oman and in Saudi with our monthly visit, myself and the CRO to the Saudi branch, and having the right team, you will achieve the right result, which is our ultimate result is to enhance the return on equity from the Saudi operation to take up the return of equity of the consolidated balance sheet. I hope that's answer your question.
Yeah. One thing I want to just check on the aspect of because the market share gain, like the CFO was also saying, pretty strong for the bank in the last 1 year. The growth rate has been pretty high. But if you see the reflection on the margins, it's not coming in. Though you're gaining market share, the margins are under pressure. What is your kind of take on that? Because it's margin compression and your loan to deposit ratio is also moving to 80%. Previously, you had that lower levels there. How do you see that? Because the market is also going through a kind of phase where still the economy is like going through kind of certain stress because of the conflict. How do you see that? Whether this kind of growth will have a kind of, I know you've been saying on the quality side, just want to understand from your strategy on market share claims and the margin compression a bit, how do you see that, and will this continue and you will take up the loan to deposit to more than 100%? What's the kind of growth you're looking at in terms of the next couple of years?
Sure, thank you. I think the answer is clearly our objective is to enhance and increase the return on equity. Return on asset is very critical for us, but if we will have a lower margin with very high quality asset which will consume lower capital from us, what we are looking mainly is high return on equity and optimization of the optimization of our equity and capital. Regarding our growth, we'll continue our growth either through Oman operation, either in retail, in the deposit side, in which we are doing that through more marketing and sponsorship and attracting more customers to us, or through the wholesale banking by lending the quality asset, diversify quality asset either in Oman and Saudi.
Yeah. That's it from my end. I'll come back to you later. Yeah.
Thank you, Sundar. Very good question. Thank you. Really appreciate it.
Hello?
Hello, Joyce.
Good morning, gentlemen.
Good morning.
Congratulations on a set of numbers and very fantastic market share gains. And that has been a story for Sohar for several couple of years now. So just picking up on the previous question, could you tell us what are your thoughts on the general market outlook in terms of credit growth? We have seen the market picking up in over the last 1.5 years. So do you see the momentum continues in terms of credit market growth? And where do you see yourself in terms of the market positioning, both in terms of the credit growth as well as on the funding side?
Sure. I think our growth strategy is mainly going with the Vision 2040, in which the vision is to attract more FDI, and that's in which we play a strong role there to attract more FDI to the countries and more investment to the country. So we try to be pioneer by finding those credit opportunity or even the depositors before they come to Oman, and even to attract them and find them the right business opportunity to operate. And that's going along with the Vision 2040, and we also focus clearly on the sectors which the visions are focusing on, and we create a clear economical report about each sectors and the forecast and the major players who should come and play that role in the Omani market.
I think it may have been in the previous presentation, Abduad, where you discussed some of the successes we've had internationally, such as the transactions out of Brazil, where the bank has ventured. We have a rep office in Hong Kong that is there to support cross-border facilitation, a customer taking the best of Oman to the world and the best of the world to Oman. So these international objectives are also Omani-centric, not just so international-centric.
Yep. Hong Kong operations, the office employees, everything's ready. The official opening ceremony will be in September. But from now, we have almost 6 live transactions coming from Hong Kong, in which investors from the world are coming to Oman, and we are working with them for different projects. And there's another 13 project, for example, in the pipeline. So that maybe can reflect the growth which we are looking for above the normal growth which you see in the market.
So how do you see the overall market growth going forward, probably for the next 18 months to 24 months?
See, in terms of numbers, I cannot disclose it. However, in terms of the economical growth, we believe there is a very strong pipeline of investors coming to the Omani market. A lot of projects are planned in the Omani market, and thus supported by the Vision 2040, and the Vision support them, so it is vice versa. And our role to maximize our input to those projects, and also maximize the output of those projects to the world.
Okay. Oh, thank you. And another question that I have is, when you say that your strategy is ROE expansion, we have noticed that despite the fast growth in assets, we are not seeing this growth getting converted into the margins. The scalability of operations are not margin accretive. NIMs are on a continuously declining path. So could you please discuss the reasons for this lower NIMs, and where do you see the margins settling over the short to medium term?
Sure. Maybe we'll answer the same way. See, mainly our growth focus on very high quality asset with lower capital allocation or risk-weighted asset, and those assets normally will require lower margin, and that's show that our growth is mainly on a quality asset and sustainable income, and all of that contribute to increase our return on equity. I believe we have a healthy growth in the NIM, but also if you notice that our NBA increased by almost 100 million Omani Riyal in the last 12 months, or 18 months, sorry, and all of that reduced the interest income which booked in our profit and loss. So if you add the same and you do your analysis, you will find that we have a healthy NIM and a healthy growth in the net interest income.
And also maybe to give another overlay to that from a different perspective is if, the funding costs in KSA, because we don't obviously have a retail operation there, is one estimate, but also the general rapid growth in the bank. It takes some time to grow the retail base, which is obviously very reliable, sticky deposits, and enhances the NIM. So as we move forward, we are seeing very positive growth in our retail deposits, but at the level of scale, it doesn't match the current level of loan growth. So what you're seeing is a reflection of the bank's growth and the need for us to gradually catch up through that retail base. And we also do still see some, to an extent, some drop in the yields on some of our treasury book, but that's now starting to normalise. That was a story we had back in 2024. So there's some other dynamics within the drivers of that NIM, but over the longer term, we expect the NIM to improve.
We need to add there is around 2 billion Omani Riyal investment securities, and those investment securities, if you notice, that the interest is mainly invested on treasury bills, in which the yield or the treasury bills worldwide in different currencies was dropping in the last 18 months. And that's drop affecting our NIM also. However, our strategy is not to depend on the interest income from investment in securities of the 2 billion Riyal, but mainly to depend on our lending activities. So by the time you will find more stable net interest income with a good growth despite the increase or decrease on the interest rate worldwide.
Okay. And when Craig mentioned about the retail operations in Saudi Arabia, are you operating on the retail side in Saudi Arabia, or is it entirely with the wholesale bank?
No, it is mainly a wholesale bank. What he means, the depositors mainly need time, and in order to attract fund and deposit from the depositors, you need a proper relationship and maybe a proper technology also, considering that the Saudi market has very strong competitors mainly on the retail market. But our operation in Saudi is mainly wholesale. And we are not planning to do retail in the near future.
Okay, got it. And what I've seen is Sohar has a higher cost of funding in the CASA side. Is there any plans for reducing the cost of funding? Basically, that is the funds that is coming from Oman.
So I'm not clear. I'm not clear on your question. Sorry.
Because we believe our CASA has lower cost.
So what was the question?
That's on the reporting side, but what I've looked at is your cost of CASA is slightly on the higher side.
See, our strategy mainly to grow the low-cost CASA, and that's what we do through investing in technology, marketing, and promotion. So that's the strategy which we are looking for. It was never our strategy to grow the high-cost CASA, and we believe that's what we'll continue to do. I'm not sure if that's answer your question, but that's what we do mainly. And we believe that's reflected in the number. A lot of things are not disclosed maybe in the financial statement with proper management analysis.
Yeah, sorry, because our cost of funds, I mean, this, you can derive this, it's market data. Our cost of funds around weighted about 2.68, which is well below most of the other banks. and customer deposits are at 2.56 as a standalone. So I'm not quite sure what the analysis are you're comparing.
You need to put in mind also, I am not sure if the cost of fund for the Saudi operation is closed, because also the cost of deposit in Saudi higher than Oman.
Okay, probably that's one.
Yeah, maybe that's the reason which you are referring to.
Yeah, I got it. Right. Yeah, that's it from my side for the time.
Thank you.
Thank you, Joyce. Thank you.
Thank you.
Assalamu alaikum.
Wa alaikum salam.
I have a couple of questions. The first question regarding the discussions on the merger with Ahli Bank. Can you give us a bit of update on that? Because it's been a while since we heard the last update. And the second question regarding the right issue. Is there like an existing plan where Sohar Bank raises right issue every 2 years? I've seen this trend in the past 6 years or so. So is it something that part of the strategy of the bank to raise capital through right issue every couple of years? And what is the plan for the funds? The 140 plus million that was raised just recently. Thank you.
Thank you. Regarding the merger, if there is any development, we will announce it on time. The latest announcement was on on June 2025, and there is no development since then about it. If there is any development, we will announce it immediately to the investors and to the market. Regarding the right issue is mainly reflect the trust of our shareholders by providing them sustainable income. When the shareholder believe that we can provide a sustainable revenue and growth in their profitability, which we present through our financial presentation and this presentation, for example, we will continue to grow. There is a lot of opportunity to grow in Oman and outside Oman, and that growth will yield a good return on equity, which pushes the investor to invest more in our capital. Of course, we will ask for the right to grow our business because we find quality opportunities either in the local or in the international market, which we operate like Saudi.
So maybe just to clarify too, Ali, one of your questions there was, is it as a matter of policy, are we looking to do a rights issue every 2 years? So the answer is no, there's no policy. As Abdulwahid mentioned, it really is a matter of looking at the bank's opportunities. And if you look historically, the bank has been very successful in identifying opportunities, raising capital to support the growth story. You'll also see that we opportunistically look to issue AT1 securities, perpetual AT1 securities. Again, last year there was 200 million. Both of those are instruments that we look at, either a rights issue or tier one, depending on the bank's capital ratio position. You've seen we've introduced MCBs for the first time, which has will in future have a marginal impact. So we're looking at those capital raising opportunities and how to structure the capital base of the bank, but really is looking at the opportunities we see ahead. And if we don't see those opportunities, we won't be looking to increase the capital of the bank. So very much looking at the strategy going forward and very responsive. We've had very strong support from shareholders in the past, and we're looking, hopefully we'll continue to have that support.
Yeah. We'd like to thank all the participants and everybody who asked questions, and I hope our answers are clear to them. And since there's no more question, we'd like to end this session and to thank all of our stakeholders for their trust and contribution to our success. Thank you.